Do they have a, are you ready? Are you ready? Let's get it on. Or do they just say, Bob? I didn't catch that.
I think they asked. You have to ask each side.
I noticed he
I was wondering, has somebody ever said no?
Yeah. Did he say
in that moment? Are you ready? Nah.
I need 5.
Yeah.
Hey, welcome to the Closing Beat, everybody. Happy Monday. How we doing out there? Good? Oh, there's no lights back there. Forgot the lights. Would you hit the lights real quick? That'd be great. Appreciate that. Happy Monday. Hope everybody's having a good day. We're back, ready to do this again for the holiday week here. Likely a pretty quiet week, so may not have a lot to cover. I'm trying to come up with some different things to share with you. And, oh, no, that's the wrong color, though. That one. See, it's 2 colors. If you could just, okay, thank you. So, we're going to talk about the stock market here today. I hope you guys are having a great week. Are you in the holiday mood or what? Like, you got the Christmas spirit? That's too bright. Well, there it is. And let's bring it down a notch. There's perfection around here. We tried one more notch. If you could just, there it is. Looking good now. We can start. Did you see the markets today? Welcome, Grateful DIYer, Missy, Dustin, love the name. Craig, oh, I love it, man. I love it, man. So I'm going to cover the interest rates rising, DIYer girl. We'll talk about that here in just a little bit because some interesting data there. I keep seeing the same comments, and I'm like, it's not true. We got to talk about that. So we'll cover that as well. And yeah, I'll try to share some stuff with you. We'll give you some new info as we can here. And throughout the week, whatever is interesting that I can bring up that's maybe not like right this second relevant, it's probably going to be one of those weeks where we do a little, jostle back and forth, and maybe not a lot of action. The volume should drift off as we head into the later part of the week is typical. I would like it if we keep selling off. I'll take that, but so far we are kind of performing volume-wise just like we normally do. Mondays tend to be more active there as people get their last-minute positioning done before the holidays there. Everybody wants to go celebrate the holidays and probably some last-minute shopping there. If we look at the S&P here today, you got a gap down of 1%, which I've shown in previously the results there, how that tends to lead to, whenever there's a gap down of 1% on a Monday, we don't often rally all the way back and somehow it's great. In fact, if we were to look at like the SPY or something, you can see the gap there, so we can show that a little better. And let me just go to the 5-minute. Here's the gap down on a 5-minute to start the day, and that's very typical, right? When that happens on a Monday, very few times do you see that we start to recover back like we saw over here on Friday. Very, very rare for that to happen on a Monday. So actually that part was pretty straightforward, pretty common relative to what we've seen throughout the year, so no problems there. Bias to the downside there. We are now under the 50-day moving average, and we have spent about 8%, only 8% of all trading days this year under the 50-day. You can see there's one here, and then the rest are right in here. So it's kind of a rare thing to see, at least for this year anyways. Now, 1% down days tend to lead to a slightly positive next day, whether it's Monday or Friday or whatever. So let me see if I can share that with you here because I'm using our research site. If you're one of our research members, this is available to you. Now we have a new tool I can share with you. What I did is I just plugged in a rolling search, S&P, using the SPY, losing 1% or greater, or losing less than 1% or more. Over one day, just looking back 10 years, because there's going to be a lot of them there, 223 times, in fact, that this happened over the last 10 years. If you look at that, that's about 8.8% of the time over the last 10 years. So it's not super rare, right? Basically 1/10 of the time, you're going to see a down 1% day. Here's all those data points off to the left and then the next day. But to see the next day now and even further, we can click this button down at the bottom. Let's go to a forward lookup. And it'll take that data and you can use it in any way that you want. So to make it real clean today, I'm going to go like this. And we're going to say what happens the next 1 day, 1 week, 1 month, just for fun, right? Let's see what happens there. So it takes all that data from before and it's going to kind of go through to see what that forward performance is. And it takes a second because there's 233 of them. And here you go. So we've got it color-coded now. Up here is the summary stats, and then these are all the details if you want to see anything or take them to a spreadsheet and do something more fun with them. But up at the top, the next 1 day tends to have an average gain of 0.24, median gain 0.23. Biggest loss was 9.7, which we could sort real quick and see. That was in March 2020. Biggest gain shortly after that, during the wildness of the COVID action there. So over the last 10 years, that'd be your biggest moment in time, and that's easy to kind of tell. 61% of the time, the next day turns out positive, but very small. So it's not one of those things you're going to say, oh, we were down, let me make some big bet that we're going to be up tomorrow. Over the next week, it gets a little bit better. The odds get a little bit better, and over the next month, it gets better as well. I should say, keep in mind that over the last 10 years, we've largely been in a bull market. It's been a pretty straight up run there. So no doubt those stats are going to stay looking pretty strong there as they are, but you can look those up in the research tool if you'd like. As far as the S&P goes, right, you want to look through some of the stocks in there. I saw the headline here today. Actually, let me show you this. This was kind of weird. I saved it on my phone for you. Hopefully you can see this. Oh, actually, that's not from that. That's something else. We're actually going to be doing like a fun podcast kind of thing where you get to see like behind the scenes, like, who am I really? Who is Cody really? Are we weirdos, or are we like really cool people you just want to hang out with? So we're going to be playing around with that because we can, and that was part of what I want to share. But look at that guy's face. This is what I saw on CNBC this morning. The Dow shed 600 points, right? Omicron spooks the markets, and he looks pretty spooked, right? No doubt that is Photoshopped. That has to be Photoshopped, right? What are the odds that someone with a camera, with that good of a lens, by the way, was pointing in that direction, taking a picture of that guy right at the moment he probably just found out like his shipping is going to be delayed for his packages for his wife for Christmas, right? So really weird. And you have that going on. The point of that story is you have that going on the headlines, but yet Carnival Cruise up 3.3%. Right? Reports earnings there. They said their forward bookings are great. Everybody wants to go on a cruise. This is awesome. It's getting better and better. You got Norwegian Cruise Lines also higher on the day, up 2%. They just had a COVID cruise ship sort of thing going on. All's fine there. Live Nation, right? Gaps down a little bit, just like the market, but recovers more than all of its losses, and then some, up 1.65%. And so you have a lot of that. American Airlines up on the day. Oh my gosh, right? 6 million people travel over the weekend, this weekend alone. That's looking pretty cool. Expedia, you'd think that would be down. They were in the news today, but also stocks higher up at 2%. So what is it? Are we spooked or are we not spooked, right? You're seeing this dissection right now where people are just buying into it, not buying into it, looking to position because they think it's not so bad and we're overreacting, and some people think it's a big deal. And that's very normal, right? We obviously have seen that before. So that's what you have going on in the S&P. Just wanted to point out a few things there. What else can we say there? No, that's good. Let's move on. You got the NASDAQ down on the day, below the 50-day moving average once again there. Apple, even with its most recent pullback, is really, it's really beating the markets. I want to show something on Apple real quick, if you'll let me. It is beating the NASDAQ by a pretty wide margin, which is odd, because Apple's like 14% of the NASDAQ. So how could it be that Apple is so extended and yet the market can't keep up with it? What's going on there? I want to go just show you something that I put together for you. I'll try to make it big and interesting. Let's go like that, stretch it out so you can see. Here's what I did. It's a different way of looking at it. We'll get the dates in there so you can see, go back like 10 years. Why not? All right, so it's about a 14% weighting on the NASDAQ there. It's not normal to see a divergence where the Apple is up so much and outpacing the NASDAQ as a whole. So right now, its 1 month total returns relative to the NASDAQ are about 14.7%. Don't let the chart scare you there. This is showing Apple's price relative to the NASDAQ. So if it were a negative number, it would be underperforming the NASDAQ. If it's a positive number, it is outperforming by that margin right there. So it's just a fancy chart to kind of put together there. There's only 9 other times in history where it's been able to outpace by double digits like this. And 9 other times since the iPhone came out, 2007. That was as far back as I could go. And so it's the third largest divergence in the last 10 years. You can see, because I got the 10 years here, so beating by 14%, we were beating by 25%. You got to go all the way over here, beating by 19%, right? So we got a wide divergence here, which is odd for such a heavily weighted stock there. Now, would you say that this means Apple is a good buy here, right? Does Apple like to stay wildly more better performing than the NASDAQ? No, it doesn't like to do that. We could just look back right here and see. It likes to get extended every now and then and immediately reverts back towards the average. The average is basically 1%. It can beat the NASDAQ by 0.8% or slightly better, but it doesn't like to beat it by 14%. So is now the time to buy Apple? Right? Of course not. I've been kind of talking about that over the last couple of days, and that includes the recent pullback here. So you know it's not time to go diving all in on this as far as like anything more than a trade. If you're going to trade and have some fun there, that's one thing to look at. But anyways, that's what I wanted to show in the NASDAQ, right? So that's that NASDAQ today. We're looking at the Dow, down about 1% on the day, back to the 200-day moving average. Couple names to point out for you. You got Goldman Sachs breaking below all recent support and the 200-day moving average as well, down 2.6%. Honeywell maybe setting up for, remember we had a little trade on that one as it got extended. It is falling apart, making new lows, so maybe getting even more extended for a new idea. And same is true with Nike. So Nike's pullback turning into more of a waterfall, higher volume type pullback. Traders like to look at that. No doubt they're looking at the 200-day, hoping for tomorrow to be weak as well. If you're playing if you're in, you got your guess in on the Guess the Dow, the super duper Guess the Dow. We give you an update on Mondays and Thursdays. There's only 9 days left to go, so let's see where we stand.
We're actually at the halfway point, so that's pretty cool. Your top 5 for the week, we got Eddie, Leo, Steven, James, and Dan. Those are your top 5 for halftime.
What does that mean, halftime? Halfway between where we started and the end?
Yeah, it was 20 days total.
Oh, okay. All right. So we got Eddie kicking some butt there so far. And, the closer you are later in this year, the better off you are, right? Because that Christmas to New Year's kind of week, we don't usually see a lot of action. This year could be different. But we don't usually see a lot of action. So if your guess is really close, you get more excited by the day, right? Because you're not expecting major moves there. A couple other things to point out. You got crude oil basically admitting that 65 is going to be support there in the short term based on what happened today. And sector-wise, I want to point out consumer staples. Again, it was the best performing sector out of the group today, even though it was down. Every sector was down on the day, but it was the best that held up the best out of everything in the S&P. So people not giving up on that consumer staples. It got a little ahead of itself, but this pullback so far has proven to be viable. All right, so here's a question. I keep seeing it. People say, well, you don't want to be in tech stocks if rates are going up, right? Anytime that 10-year starts going up, it's not a good deal. You end up with tech stocks getting weaker. Is that true? So what we did, first we looked at the market. With the market going, does the market go up or down relative to rising or falling rates? Then we added the sector, and we said, does the technology sector really go up or go down when rates start going up? What's the performance there? And then we break it down even more just to help you with the geeky stuff. So what should you do? Here's the S&P performance based on the last 10 years, looking at moments where the rates were rising and rates were falling. So in the black, we have rising rates. The S&P actually performs an average of 11.4% when rates are rising. The falling rate period is still positive, but only 2.2%. So the stock market itself performs better during rising rates over the last 10 years. That's not a typo, right? All right, so if we look at technology, we can actually see that technology outperforms the S&P over the last 10 years when rates were going up. When rates are falling, you've got an underperformance there. So when rates fall, the technology sector doesn't necessarily do anything better. It, in fact, would be better off to just invest in the S&P. When rates are rising, it is not necessarily a bearish signal. And to prove it, we took every single moment and plotted that for you to see. So looking back over 10 years, what you can see is the month when rates were rising or times where rates were falling there. So we went through, and this was rising rates, sorry. So we went through and looked at it. So here we go. Back in October of 2010 to February of 2011, you got rising rates. The S&P actually I didn't put the actual number there, but something close to 15%. Technology outperforms. If you look, as you get all the way into this last mood of, stopped in like October, if you look at it, you can see that technology really only underperformed once, twice, and I believe there's a third. There's a third. All right, so there's only 3 times where technology underperformed. Did not perform negatively. It just underperformed, right? So the argument of saying rising rates for what we've seen just doesn't hold true there, right? Now, you could say that what's the severity of the rising rates, and if we have a severe increase in rates, all right, maybe that changes things. But so far, that's not the case. Well, what's happening right now, right this very moment? We take a look at that. Hopefully it's clean for you. What I've got here is in black the 10-year rate, so whether it's rising or falling. We could say currently the 10-year rate is falling. And then we have technology as utilized by the XLK, right? Just using the ETF to make it simple. So in red, you got a rising tech, and maybe you have a declining tech here at the moment. What do we have? This is just a 6-month chart, but if we're looking back here at this last little moment where rates are declining, notice how tech stocks just all of a sudden kind of faded away. They haven't been able to continue their momentum. When rates were rising, so were tech stocks, right? To some correlation. It's not perfect, but here you go. Now all of a sudden rates are falling. Look at tech stocks. You can't argue that they haven't been weak here lately. So you can't say in the general day-to-day format that, yeah, rising rates are bad for tech stocks. It's not technically true, at least looking back over the last 10 years. All right, moving on to new highs and lows for the day. There's only 2 new highs, 12 new lows. Let's take a look at this. Medtronics. There you go. Medtronics is first up. Hit a new 52-week low, found itself extended. I actually sold the $95 puts to take a shot at maybe this giving us a little bounce or sideways movement. Might have been a touch early, but that's what you have. You have its furthest point away from the 20-day moving average, and you also have the highest volume, I believe, for the year that it's seen. So put those 2 things together, you got a recipe for potentially a bounce, and I hope that it does bounce. Just a short-term trade. Remember, we're not traders here. We just like to occasionally put on our own little fun trades. You got Best Buy hitting new lows as well. There you go. That was one of the new 52-week lows and breaking below any form of normal sort of support there that's obvious for technical traders. So that one's worth noting. Oh, we got to type it right. Ross Stores, actually retail as a whole, right? Just got weakness there in retail. Ross Stores, there was a couple others as well, Best Buy obviously, but I just want to point that out. The only 2 highs for the day were Pfizer hitting new highs, of course, you could probably guess why, and Broadcom refuses to be a semiconductor here that is going to pull back. I believe it was the only semiconductor to make new highs for the day. That's got to be notable. Stocks in the news. Disney and Alphabet come to a deal there to keep the Disney channels on there, your normal YouTube price, which is $64, by the way. I did not know that, right? I just would have kept my cable, right? That's really expensive. But anyways, they came to a deal, Disney down just a touch there, so maybe they got the best of them there. I don't know. Alphabet anyways. Not Dunkin'. I wanted to say Dunkin'. This is Krispy Kreme. Ticker symbol DNUT. So down 7% on the day. Actually good. Sales were higher. Reported earnings that came out there. Net income was just a touch lower there. And I think guidance just a touch off. Although they raised guidance, it was not raised up to the level of expectation of Wall Street. So you got a slight weak day there. Also a newer stock, so don't look at it. I don't look at it often. Johnson & Johnson in the news. This is kind of old, came out before the weekend there, but New York Times says that the COVID vaccine actually does little to stop infections from the Omicron or Omicron. Can I just say Omicron? That's how I like to say it. Can I just do that? General Mills, one of the consumer staple stocks in the news because their earnings are coming up tomorrow, I believe. This will be one of the only ones, if not the only company reporting earnings tomorrow. 69% of the time they beat on earnings, 56% of the time on revenues, basically a coin flip, how the stock is going to react. And you got to take note that it is extended here in the short term, so keep an eye on that one. And Cerner getting bought out by Oracle for $95 a share in cash. This one's really simple. So this is not a complex deal here for Oracle. It's interesting that they're going into this space, but you have $95 a share is the deal. If the deal goes through at $95 a share, why would you sell here? So if you own it and you're like, woohoo, just made all this money. Okay, but 95 is the deal. So you can sell it now and not worry about the deal, or you can realize that it's a cash offer for $95 a share, and if you do nothing, When the deal closes, they are required to pay you $95 a share. That's $4.50 higher than where it currently is. So where's the pressure to sell? Unless the deal doesn't go through, there's some sort of issue, but I mean, it's not like Oracle's buying Cisco or something. They're out going outside their space. So if you think that deal's going through, then stick with it, man. What are you doing? I got a couple questions on that. Should I sell? And I'm like, why would you sell? They're going to give you 95 if you'll just hang out there a little bit. So that's what you have. I'll take your questions if you have any questions. Oh, also I closed the AbbVie trade, and that was just nerves. So AbbVie closed for 41% of the total premium. Small pullback. That was good enough for me. I told you guys, what was it, Thursday, that I don't like that I was short that position. So I'm out. That's it. That's over. I would have gotten out at any point throughout the day. I just happened to glance at it and said, that's it. I'm good enough with that. Not trying to be a hero, especially in that space. I just don't normally do well in that space, to be honest. And by the way, 2-year anniversary for the Space Force. You familiar with the Space Force over there?
I am familiar with the Space Force.
Tell you what has the Space Force been up to in the last 2 years?
I mean, hunting aliens, right? Isn't that?
Yeah, I don't know. Like that, to me, there you go. They're not talking. They're just out there doing whatever they're doing. I have no idea what they've done over the last 2 years.
I thought they were getting rid of it, but.
Oh, was it going away?
Yeah, I thought that was one of the first
things
that happened with the new administration, but I could be wrong.
No, I mean, it's still there, 2-year anniversary, but it's like, I'm just curious, what are they doing every day? Like, who are these people? It's an interesting.
Well, they made that documentary, right, on Netflix.
Well, that was a fun show.
With Steve Carell. Yeah.
It wasn't a documentary.
I thought
it was a fun show. One season, it was done. Well, anyways, congratulations. If you're in the Space Force, throw me a phone call. Let me know what you've been up to. I'm just curious. You don't have to give away the secrets or anything. Anyways, I'll start with some questions here. See what I can do. Hey, Dustin, what do you think about starting a position in Morgan Stanley? Rates going up, and it's near its 200 day. So you like Morgan Stanley. You said, that's my bank. I'm going to choose that one there. You really have two choices. You can assume the 200 day is going to hold. This is your least risk with most reward, right? Because obviously if it doesn't hold, you just get out somewhere below there. But if it does hold, of course, you got a great entry price. If you're a little concerned and you're like, yeah, I don't know, market's getting weaker, I don't want to start right here just in case. Well, and you wait for it to break this very minuscule, shallow type downtrend, you would have smaller reward, but of course less risk at that point as well, because you get to see it break and see a few days higher and things like that. So that one's up to you. More risk, more reward, less risk, less reward. I have no idea where Alibaba is going to bottom out dollar-wise. I have no idea. Love to start a position there. Thought it might have been the other day. Looked like it was trying to bottom out. It will not stop. Like I have no idea. Yep. I know. You want to do a study on the silver, what silver does when interest rates goes up. Yeah, no reason we can't do that. Be a good one. Something to do maybe this week. Yeah. I get that the development of Space Force, I just want to know what these people are doing. You know? Are you curious? I mean, it's a lot of money that we're put towards this thing. What are you working on, guys? You like Goldman Sachs on the fresh break there? All right. Yeah. Your bank has been Wells Fargo forever, been amazing with you. I'm glad to hear that. I've heard a lot of complaints, but not recently. I have to say honestly, not recently. Yep. Care to comment on the Build Back Better bill in the areas of the market impacted? Well, just for today, any electric car maker, Rivian, Lucid, things like that, any electric car maker outside of Tesla, right, which is good for you, but because they weren't really impacted by the bill, it was all the other ones, and even General Motors, automakers, things like that. That's where I saw the most action, at least early on throughout the day, because maybe they're not going to get those subsidies, they're not going to get that extra help, the help to do charging stations and things like that. I saw a clip of Elon Musk over the weekend where they said, what do you think about the subsidies for the charging stations? And he's like, stupid, get rid of it. We don't need subsidies for gas stations. Why do you need them for charging stations? And well, it's a fair point. I get he's biased now. I understand that, but yeah, it's kind of a clever point. Clever words there. So yeah, that was basically what I caught out of that for today. As far as the details of how they move forward and what they move forward with, haven't looked into it yet. Sheesh, oh, you're going to have that 20% pullback this time. It's good. Bring it. She sell Apple. You bought it at 111. Oh, you want to buy more Square with it. Okay. Well, so first thing is when you bought at 111, you had to have had a target in mind. You have to. And if you didn't, then that's your first mistake right there. Anytime you buy a stock, if you're a trader and you're just saying, I'm going to buy it, I think it's discounted, whatever, oh, well, what's the goal, right? So it's a great trade. Great job. You made the money there. But did you hit your goal yet? I mean, there's no reason to believe Apple just stops and never goes to a new high here again. So if you were saying, if I could get to 200 or something, that'd be great, then hold out and wait for that. Go with what's working right now, because Square was the one you said? If you're trying to go in and add to Square, there's no guarantee that this is the bottom. It's certainly extended, all that stuff, but there's no guarantee that's the bottom. So you've got a guaranteed winner, assuming you haven't hit your target yet. I find it tough to say, let me close that position and go out here. Maybe sell a piece of it, little chunk, take some of the profits off the table and say, all right, I'm willing to risk the profits. But not much more than that. Yeah. Well, they were all hurt today by that news. I just saw that Tesla was hurt the least. So you figure it's like, all right, broad sell-off, markets are moving lower, Tesla's headed lower anyways, but not as bad as some of the others. Yeah, I know. Yeah, so I don't know where they go with that. We'll see. Top pick for 2022, don't have it yet. So if you bought Cerner now at 90, they'd have to pay us 92. You could do that. Yeah, you could buy it for 90 and then just sit back. I mean, the deal could not go through. There's a chance the deal falls through and that stock goes all the way back to where it started. So keep in mind that's aggressive to say, oh, this is a home run, right? $5, I'm going to make $5. You see how often that happens where a company comes out and they're like, don't know where you got this news from, but that's not happening. That's not the case this time, but the deal still could fall through. What do we think of Fubo? This goes in with kind of a little bit like Roku, right? So, sorry, you can't see it. That's Roku. Here's Fubo. So it kind of in the same camp where it's sort of dead money right now. There's no, and I believe we talked about this a couple months ago, there's no good reason to believe that it's just going to start bouncing from here, right? No doubt it's getting discounted by the day and stuff, but any reason to say now's a good time to jump in? Anything at all? And I don't have it. So I would say I got nothing. No reason to start a position on that one. Now, if you owned it, I certainly would just hold it unless you're looking for some tax loss harvesting there. But it's right at that support. Maybe the technical support holds, maybe not. But there you go. I mean, that's depending on what side of the fence you're on. Buying the dip? Not yet, but I do like the small caps first, and I just don't think they're there yet. I don't want to be the first in, but I like that pullback there as it's starting to develop. Got to consider Tesla for a top pick in 22. Thinking about going outside the box. Nothing against Tesla. I'm just thinking about going outside the box, maybe in something small cap land, have a little fun, or maybe I'll break it down by market cap. Yeah. Like it. All right. I'll wrap it up. Oh, Snap at the bottom there. You want to buy some Snap? But there has to be something, right? Just guessing that it's at the bottom, you might get lucky. Maybe it's a temporary bottom. I don't know if you're trading it or you own it or whatever. But there's nothing here to say that's a bottom or that's a reasonable attempt at guessing that's the bottom. I got nothing. Nothing smart anyways. Yep, I've covered everything I want to cover. We will wrap it up there. I hope you guys have a great rest of your day, and assume we'll be back tomorrow as the week goes on. If things really do get quiet, maybe we'll bow out a little early, but so far, so good. We'll see what happens, and you guys enjoy the rest of your evening. Adios.